Hey, what's going on? It's Nick here from Ways of Wealth. Thank you for tuning in. It's week 21 of the market recap. And if this is your first time here, we highlight key events that happened over the past week on the markets. So if you learned something new, give me a thumbs up. We do this every single week, so make sure you subscribe and turn that notification bell on. We have a great episode lined up for this week. We're going to be talking about Dr. Fauci. He's given the okay to start reopening the economy. We're going to be talking about sports gambler, stock trader. Which one is it? I don't know. And to tap it all off, we're going to be talking about China. They've pulled their GDP expectations off the table. Is that a red flag? We'll find out. All right, let's get right into it. As the hospitalization numbers continue to decrease, it seems as if Dr. Anthony Fauci's sentiment is changing. The tables are turning. He wants to start reopening the economy, obviously in phases, and on Friday he stated, "We certainly want to, in a cautious way, reopen. We can't stay locked down for such a considerable period of time that might do irreparable damage and have unintended consequences, including consequences for health." He also mentioned that staying down for such a long period of time is not the way that we're going to be able to combat the virus, and he doesn't want people to think that this is the solution. Now, these statements have come full circle. Only last week, Dr. Fauci was in front of Congress issuing warnings saying if we open the economy too fast and too soon, it might cause unnecessary suffering and death. Now, what I think he's trying to say with his most recent comments is that we must take these mitigated risks, we must intelligently plan for the reopening of the economy. He knows that the longer that we hold people inside, the longer that we shut these businesses down, it's going to cause damage in the future, but let's do it smart and let's do it right. Well, this is definitely some great news, not only for morale and the warmer weather coming, but for the economy and for the investor. Now, I get that we're going to have to take as many precautions as possible to prevent any future outbreaks. There is no doubt about that. But if we can do anything to protect a human life along with protecting local businesses, I'm all for it. With that being said, I still think that the stock market currently is just a tad bit overvalued. But I was reading a few articles this week and they were breaking down a theory that they had as to why the market and some sections of it are reaching all-time highs. And that comes with the modern day sports gambler. So the modern day sports gambler currently has nowhere to go. There's no sports being played unless you're betting on Korean baseball or you're betting on ping pong. So a lot of them have transitioned that gambling and getting that, scratching that itch to the stock market. And is that why the Nasdaq's hitting all-time highs with the tech companies that we're all familiar with? Dave Portnoy, or for some of you who know him as El Prez or El Presidente, recently talked about the switch and the trend towards investing, and he said it's the combination of no sports. So you can't bet on that, you can't go outside, and there's a lot of people right now that are sitting in front of their computers who can't ordinarily be day trading. He followed it up by saying for a gambler, investing has a ton of similarities. Now, not letting this opportunity go to waste, El Presidente started up his own firm, the Davey Day Trading Global, the DDTG, and you can catch him on Twitter. He live streams every day when the markets are open, and he's buying the airlines, he's buying the cruise ships. Most recently, he bought Alibaba, and it's great entertainment. With the mix of no sports combined with the increased coverage of the stock market, we've seen these online brokers report record high new account signups. Charles Schwab, E-Trade, Interactive Brokers, those are the three largest out of four in the US in terms of the online broker scene. They gained 780,000 new customers collectively in March alone. This is a 300% gain in the month when you compare the monthly averages over the past 2 years. Now, if we want to individually break it down, Charles Schwab, they reported a 58% increase in new accounts year over year, while E-Trade saw a 169% increase in the same time frame. Now, I don't know if it's a coincidence or not, but Davey Day Trader Global, DDTG, they use E-Trade, so I don't know if that is the reason why they've seen such an increase. I personally don't use the platform, but maybe Mr. Portnoy deserves a commission check there. We also saw Randy Frederick, who's the VP of Charles Schwab's Trading and Derivatives Department, come out and say that there's a few other factors and kind of agreed with the point. Basically, the online broker has made investing more accessible and more reachable than ever before, mixed in with the zero commission portion of it, so there's no fees to trade, has attracted a newer, younger investor, which has never been done before, mixed with the longest bull cycle that we've seen recently, 10 or 12 years. We've seen a little bit of a pullback from those numbers, and it's provided new young investors an opportunity to get their feet wet and invest for the first time ever. Now, could this be the reason that stock prices are starting to revisit levels that they were pre-virus? We've even seen companies like Apple hit all-time highs. Is this the reason the younger investor, are they propping up the market? What's going to happen in Q2 when these earnings are going to come back worse than expected? Are they going to flee, or are they investing for the long run? That's something that is to be seen and something that I'm keeping an eye out for. Another thing is, we saw the king of value investing, Warren Buffett. He was a net seller in Q1. So the king is holding off, and he understands that the worst is yet to come, whereas the young naive is buying and planning for 20 or 30 years out. Who knows? But I definitely don't suggest in trying to time the market. My own personal opinion is that you pick companies that will last for a long period of time. From there, you move positions in slowly. So whether it's a certain money amount that you're gonna put in, you're gonna break that into allotments and move it in over time, and we call that dollar cost averaging. But right now, my sentiment is that I'm not putting any new money to work, and I want to see what Q2 looks like. Maybe I'll miss out and I'll have some FOMO, but I know over the long period of time, I'm gonna dollar cost average in. To further expand how difficult it is right now to predict where the economy is going in the short run, we can look at an example this week that China has pulled their GDP expectations for 2020 completely off the table. This is the first time that they have ever done this. Now you might say, China fabricates the numbers that come back are always completely bogus. I think that that's something that I do take into context, but what I'm actually looking for is the underlying sentiment. And the underlying sentiment, by taking these expectations off the table, are completely negative. That is a huge red flag to me. Think of it like this. You just took a test and your parents asked you, how you think you did on the test, and you're pretty sure that that number is not going to make them happy. So what you do is you under-promise, but you over-deliver. So you tell them, hey, I think, I failed this chemistry test. But in reality, you're going to get that test result back and it's a C, and they're going to be happy because you didn't fail. So if China was taking that number off the table, but they fabricated in the same sense, wouldn't they say, we expect negative 2% when in reality they could do 0? So it's a huge red flag in terms of the sentiment. What is the overall ideology of what they think is going on? And it does not look great. So we've covered Dr. Fauci and him giving the okay to start reopening the economy. We've covered the sports gambler turned into the stock trader. We've covered China taking GDP expectations off the table. And that is it for this week on the market recap. If you enjoyed the video, please give me a thumbs up. It helps me grow. Leave me a comment down below. Let me know what you think about the current economic state. I'll throw my Instagram here on the side, post motivational quotes and some charts to get you through the week. Make sure you subscribe. We do this every single week. Have a great week on the markets and happy trading.